For the last 50 years, there has been one rule that held the entire global financial system together. Every barrel of oil on Earth gets priced in US dollars. Not yuan, not euros, not gold. Dollars. And that one rule, that single boring accounting convention, is the reason the United States can run trillion-dollar deficits year after year and still have countries lining up to lend it money. It's the reason America gets to print its way out of problems that would bankrupt any other country on the planet. And it's the reason the dollar is the most powerful financial instrument in human history. That rule is called the Petrodollar system. And Saudi Arabia is quietly dismantling it. Not loudly. Not with a press conference. Not with a dramatic announcement that would crash markets and trigger a diplomatic crisis. They're doing it slowly, methodically, and in a way that most financial media either doesn't understand or doesn't want to explain. So today I'm going to explain it. Because this isn't just a story about oil and geopolitics. It's a story about the financial architecture that props up every stock in your portfolio, keeps your mortgage rate where it is, and determines how much your dollar is actually worth. And that architecture is changing right now. To understand what Saudi Arabia is doing, you first have to understand what the petrodollar system actually is. Because the way it gets explained in the news is usually so dumbed down, it misses the entire point. Here's the real version. It's 1971. Nixon just took the US dollar off the gold standard, which means the dollar is no longer backed by anything physical. It's just paper and confidence. And after that move, the world has a legitimate question. Why should anyone trust the dollar? The answer came in 1974. Henry Kissinger flew to Riyadh and cut a deal with the Saudi royal family. The terms were simple. Saudi Arabia agrees to price all of its oil sales in US dollars and to reinvest its oil profits back into US Treasury bonds. In return, America provides military protection, weapons, and a security guarantee for the Saudi regime. And that deal, that quiet handshake in the desert, restructured the entire global financial system. Because here's what it actually meant in practice. If you're Japan and you want to buy Saudi oil, you first have to get dollars. If you're Germany, same thing. If you're China, same thing. Every country that buys oil, which is every country on Earth, needs dollars to do it. And that creates a permanent, structural global demand for the US dollar that has nothing to do with how well America manages its economy. And then there's the second piece, petrodollar recycling. Saudi Arabia takes all those dollars it earns from selling oil and it parks them back into US Treasury bonds, which means the United States gets to borrow money cheaply because there's always a guaranteed buyer of its debt sitting in Riyadh. It's one of the most elegant financial arrangements ever constructed. The US gets to run deficits without consequences. Saudi Arabia gets military protection and geopolitical cover, and the rest of the world gets to fund both of them whether they like it or not. That system ran uninterrupted for 50 years, and now it's unwinding. The first visible crack came in June 2024, when a 50-year economic cooperation agreement between the US and Saudi Arabia quietly expired. Saudi Arabia did not renew it. Now, to be clear, this wasn't a formal petrodollar treaty. There's no signed document that said Saudi Arabia must sell oil in dollars. The arrangement was always more of an understanding than a contract, a mutually beneficial relationship that both sides maintained because the incentives made sense. But the fact that Saudi Arabia let the agreement lapse with no renewal, no renegotiation, and no public statement told you everything about how the relationship has changed, because the incentives have shifted. Saudi Arabia's #1 oil customer is no longer the United States. It's China. China imports more Saudi oil than any other country on Earth. and China has been very publicly pushing for oil to be settled in yuan, its own currency, rather than dollars. In 2018, China launched yuan-denominated oil futures contracts on the Shanghai International Energy Exchange. It was a direct challenge to dollar pricing in oil markets. At the time, most analysts laughed it off. They're not laughing anymore. By 2023, Saudi Crown Prince Mohammed bin Salman and Chinese President Xi Jinping had formally agreed to explore oil trade settled in yuan. And through 2025 and into 2026, analysts tracking oil settlement data began noticing a pattern. An increasing share of Saudi-China oil transactions were being processed in yuan rather than dollars. Not the majority. Not even close. But the direction of travel was unmistakable. And this is how the petrodollar doesn't die in a day. It dies in percentage points. To understand why Saudi Arabia is doing this, you have to understand what China is offering that America isn't. China is building what you could call a parallel financial architecture, one that doesn't run through the US dollar, doesn't rely on American-controlled payment systems like SWIFT, and doesn't come with the geopolitical strings that American partnerships always include. One of the centerpieces of this is a platform called mBridge. It's a cross-border payment system built on digital currencies developed jointly by China, the UAE, Saudi Arabia, and several other countries. It lets countries settle oil transactions with each other directly in their own currencies without touching the US dollar or the Western financial system at all. The Asia Society published a major report in January 2025 describing mBridge as one of the most significant structural challenges to the petrodollar system ever built. And it's not theoretical, it's operational. And then there's Vision 2030. This is MBS's plan to transform the Saudi economy away from oil dependency, to build technology hubs, tourism infrastructure, entertainment industries, and a diversified economy that isn't a one-trick petrostate. And who's helping build it? Mostly China, Chinese engineers, Chinese construction firms, Chinese technology companies. When your biggest trading partner, your biggest construction contractor, and your biggest oil customer are all the same country, and that country is offering you a way to settle all of those transactions in its own currency, without the political pressure, without the human rights lectures, and without the weapons deals that come with conditions attached, the math starts to look different. Saudi Arabia isn't abandoning America. They're hedging, and there's a difference. But the hedge is real. It's accelerating, and the financial consequences are only beginning to show up. Here's where this stops being a geopolitics story and starts being a personal finance story. Because the petrodollar system doesn't just benefit America in some abstract geopolitical sense, it benefits you directly in ways you probably never connected to a deal made in a Saudi palace in 1974. The dollar's reserve currency status, which the petrodollar system enforces, means the United States can borrow money at lower interest rates than any other country on earth. And those interest rates flow through everything. When the 10-year Treasury yield stays lower because global demand for U.S. debt is strong, because Saudi Arabia and others keep recycling petrodollars into treasuries, mortgage rates stay lower. Corporate borrowing costs stay lower. Valuations on your stocks stay higher because analysts discount future cash flows at a lower rate. Now flip it. If Saudi Arabia starts settling more oil in yuan, those petrodollars don't get recycled into treasuries. Global demand for U.S. debt weakens. The Treasury has to offer higher yields to attract buyers. Long-term rates rise. And when long-term rates rise, your mortgage gets more expensive, your stock portfolio gets compressed, and the cost of everything debt-financed goes up. You've probably noticed in the last few years that the Federal Reserve has cut short-term interest rates, but mortgage rates haven't followed. This is part of the reason. The long end of the yield curve doesn't answer to Jerome Powell. It answers to supply and demand. And when structural demand for U.S. Treasuries weakens, long rates stay elevated, regardless of what the Fed does. This is the transmission mechanism. From Riyadh to your refinancing application. And traditional financial media isn't drawing that line for you because it requires actually explaining how the system works, which takes longer than a 90-second news hit. Now here's the part where I have to be honest with you, because there's a version of this story that's exaggerated and a version that's understated, and I want to give you the accurate one. The dollar is not dying. Let me be clear about that. As of today, around 80% of global oil trade is still denominated in dollars. Saudi Arabia still pegs its currency, the riyal, to the US dollar. And Saudi Arabia actually increased its holdings of U.S. Treasuries through much of 2024, holding roughly $144 billion as of mid-year. So the relationship isn't over, but what's happening is something more subtle and arguably more dangerous than an overnight collapse. It's the slow erosion of the structural demand that made the dollar untouchable. Every percentage point of oil trade that shifts away from dollar settlement is a percentage point less structural demand for U.S. debt, and those percentage points add up over years and decades, not weeks. S&P Global, in a detailed research report, described the pace of this shift as gradual but real, and noted that China's expanding trade with the Middle East, which more than tripled over the past 2 decades, creates natural momentum toward greater yuan use that doesn't require any dramatic political decision from Riyadh. The Asia Society called it careful calibration rather than dramatic realignment. Saudi Arabia isn't burning bridges, it's building new ones. And every new one is a bridge that doesn't run through Washington. What this likely means over the next decade is not the collapse of the dollar, but the gradual decline of its outsized clout. The term used by multiple economists to describe the privilege America has enjoyed for 50 years. The privilege of borrowing cheaply, the privilege of printing money, the privilege of running deficits that no other country could survive. That privilege is being taxed, quietly, one yuan-settled oil transaction at a time. So here's the corrected version of this story. The petrodollar isn't dying in a press conference. It's dying in basis points, in settlement data, in digital currency platforms that most people have never heard of. In a 50-year agreement that expired quietly on a Tuesday in June 2024 and barely made the front page. And here's the thing about the dollar's reserve currency status. You benefit from it every day without knowing it. Every time you get a mortgage, every time your retirement account buys stocks, every time the U.S. government borrows to keep the lights on at lower rates than any other country could. All of that is downstream of the petrodollar system, and that system is being renegotiated right now, not at a summit, not on CNBC, but in bilateral trade agreements, digital payment platforms, and quiet diplomatic meetings between Riyadh and Beijing that don't make the evening news. Traditional financial media isn't covering this because it takes more than a headline to explain. It's not a crash. It's not a crisis. It's a structural shift. And structural shifts are only obvious in hindsight. If you want to understand the stuff that actually moves markets before it becomes obvious, hit subscribe. Because by the time this is front page news, the trade will already be over.